Hey, good afternoon, everyone. Thank you for joining us. Each of you guys here. We truly appreciate having each of you here with us today. And I want to apologize for my voice. Unfortunately, the cold that is going around, so my voice is a little bit raspy.
Muted.
Cough, so I want to apologize if I have to suddenly jump off the mic real quick. Hopefully Steve will recognize that and just go ahead and jump right on in. Anyway, we want to welcome each of you to the Market Makers Dirty Little Secrets live webinar with Steve Morrow. Boy, that's a mouthful. I guess we have to have a big name for it since it's going to be a really big webinar with a ton of great insight. And it's great to have Steve with us. I was just thinking the other day as we were preparing for this webinar and the upcoming class about how we met and how many traders have had complete transformations in their trading. You know, there are a number that have been able to become fund manager, one that's already trading well over $40 million. I'm not even sure where he is now since that was last summer. Traders have been able to quit their jobs, bought dream homes on the beach and the islands, and secure their financial future. Now, not every trader has been able to have that success, but the important thing is they've been given the same keys and the door is open for them to have that success as well. And the important thing is having the process to be able to make the success possible. So we're all wanting to take charge of our financial security, and the financial markets can certainly provide that security that we are all seeking to create and give us the financial independence, you know, that we're wanting for ourselves and for our family. You know, it's amazing how fast time flies. I cannot believe it's been 2 years. It just seems like yesterday that we were introduced to Steve for one of our traders in our trade room. He was having amazing success, and after lots of begging and arm twisting, we convinced Steve to work with us and our traders so he could expose his insight about the markets and market makers to more traders. At the time, Steve was pretty much underground. He was traveling around by word of mouth, meeting with, you know, little small trading groups and teaching small groups of traders live. Well, I wanted to learn what he was teaching, and I did not want to have to wait until his next live class. So that is where the begging and arm twisting came in, trying to convince him to do an online class, which he had never done before, to change his holiday plans since he had already made some plans for them, for he and his wife to be, and family to be traveling since it was getting close to Christmas. Well, the class was a huge success and traders were blown away, and the rest is absolute history. We've done several classes since then. I think we've had about 1,100 traders that have been taught by Steve. So as a trader, I'm always in pursuit of progress and seek to learn as much as possible and improve myself, because, you know, there's just not a university that you can go out and attend. And I guess we all have attended the School of Hard Knocks, but not a formal school to get training. There's just not one way to trade, and it takes dedication to find what works for each of us. As with everything, you really need to do what successful people do. You know, I think I'm really learning and seeing this, that, you know, just got to keep it simple and follow the same process. It makes so much sense, right? Unfortunately, it can be very frustrating, and trading shouldn't be so hard, but somehow we certainly make the process really, really hard. You know, many traders struggle to become consistent, and since you don't know what you don't know, and what you don't know can hurt you, it makes the process very, very hard and frustrating. You know, today Steve's going to change that for you. He's going to show you how you can know what's happening in the markets and how you can read what's going on. He's going to show you the behavior in the charts that continues to trap you, what phase lures you in to trap you, and how you can avoid the trap when you know what to watch for. Once you can see the trap, you can follow the money. And he's going to show you how to truly follow the money, because after all, it is all about the money. Sometimes we have to think about the obvious, and we know that the big money, the big players, you know, they continue to make big money. They continue to put up big numbers. So I think it's, you know, we should always be thinking that, you know, to trade with them, like them, and, you know, we don't have to have their degrees and their big money to do what they do. We just have to know how to think like them. So as we all know wrong thinking will get us wrong results, especially when it comes to trading in the markets, and then you put in emotions and all of that into play. So this morning the behavior that Steve's going to teach you was very clear. In the U.S. session, the footprint was very clear what was happening in the euro, the pound, and the Aussie. They set the trap. Hopefully you didn't fall for their trap. They were luring people and traders to get short, and Steve's going to show you how that trap was set and how it's there day after day. You just have to know how to look for it. So, being able to identify the high and the low and the patterns and the traps, is really going to change how you look at the market. So right now I'm asking you need to turn off all of the distractions you have around you. Don't be looking at the charts. Turn off your cell phones. Don't be checking your emails and everything that we all do, because the one thing that we're finding, with day trading, we need to not have those distractions. So today, we want you to really focus and really listen, because the message can, become very clear what you need to do, and sometimes it's just what you didn't know that all of a sudden it can be that aha little moment for you. For us, it all started with Rick sharing his live trading account. He was the trader that I was referring to in our trading room, and he was able to take $1,300 to $97,000, which was just crazy. And since it was just in 1 month and he had had several months of mind-blowing results, I was certainly wanting to know what he knew. Now, I want to stress that he was using crazy leverage, and I would never recommend the leverage, but more importantly, the risk that he was using. But he was certainly having success, and that was attention grabbing. While his results were fantastic, it was what he learned that was so interesting, and it was apparent that he knew something very different about the markets and in the markets that I did not know, and that he was completely looking at the markets different, and I wanted to know what he wanted to know. So that's what about this whole relationship between us and Steve started about 2 years ago. So Steve, as we're preparing for our upcoming class, it's always rewarding for us to be able to see who the next superstar is going to be. So today's presentation is going to be for education purposes, and since we're going to be talking about trading and profits, it's important to know that there is risk with trading, and you should never trade with money that you can't afford to lose. The profits we talk about, especially those that are putting up huge numbers, may be using high risk, and this risk is not suitable for everyone. So Steve, if you're ready, let's give traders the same blueprint that you've been given and showing people for the last couple of years. But I want to make sure, if this is the first time that you've heard, Steve, be ready, because this is going to be eye-opening stuff. If you've been on Steve's webinars for a number of times, he always shares some nuggets. Be ready to and you may hear it a little different. Sometimes we have to hear things a number of times before it really clicks with us what we need to do. So I want to welcome you, Steve, and I want to thank you for joining us today, and let's get started.
All right, guys. Thanks for having me here. Thank you, Kim. I appreciate it for the warm introduction. Hey, guys. How are you all? Nice to see everybody in here. Let me ask you a question. If this is your first time, put a 1 up for me. And let me know it's the first time you ever hear me, because my focus is directed to you guys. Very nice, very nice. Asubio, that's not your first time, buddy. All right. Very nice, very nice. Okay. Let's get right into it. The slide up there says introductions and apologies. Well, I haven't said anything, but I'm going to apologize in advance. Here's why. I'm a straight up, no nonsense, no bullshit kind of guy, and I'm going to lay it out for you today. Straight up. I'm not going to pull any punches. I'm not going to add any fluff. I'm going to give it to you like it is. You're either going to love me or hate me, but absolutely there's going to be no in between. A little bit about how I got here. Like many of you, I fell for the infomercial late at night, was trying to figure out this crazy business, and a chance opportunity or meeting. A friend of mine who lived across the street was an airline pilot, and he was flying the guy. Well, who's the guy? The guy is the one that takes your money every day, hits your stops, and dwindles your equity in your account and pretty much pisses you off on a day-to-day basis. I was able to meet this guy, and he was coming to the end of his run, and he said that he was going to mentor 5 people, and the price was 25 G's. Well, at the time, I didn't have it. I scraped every single penny, credit card, home equity line, hit the parents up, every single thing that I could do to come up with the $25,000. And what happened to me over the next 6 months after mentoring him was life-altering, to say the least. And it landed me here with you. My friend that taught me and mentored me for 1 year has passed away. I looked at the documents, had my attorneys go over it, and the stuff that I signed through him is void upon the end of his lifetime. You know, I'm sick of what's going on in the world right now. The economy, we're falling off a cliff, all this garbage that's out there. And I decided that I didn't want to take this information to my grave with me. Kim convinced me to start teaching on a global platform on the web, and here I am. So with that said, I'm happy to be here. I'm excited. I love the business. You're going to see my passion for it. It's been a fantastic run for myself for the last 12 years and my family. And I'm hoping that I can make a difference in your life, big or small. And I hope that you remember and I touch you in some way today and help you in your trading. All right, so let's figure out why we're all here. We're all here to learn how to beat the market maker. Let's beat these guys, man. All right, so let's get to some basic stuff. Some common misconceptions. I want to talk about the garbage that's out there, is that the market is too big to be manipulated. You know what? It's a $4 trillion market. Okay, that sounds awful big to me, but you know what? It's controlled and it's manipulated in certain behaviors that are visible on the chart, and I'm going to share them with you today. Random walk theory, the market is not random. There's no such thing as a market maker. Supply, demand trading, support and resistance. Listen, this webinar is full. There's not one seat left in the house. The reason is because people want the truth. If support and resistance work, supply, demand, draw a trend line, if that shit worked, you wouldn't be in here with me right now, would you? You'd be enjoying your 7-figure income trading the market. What touches my heart every time is that there is a demand for the truth from people that are trading, that are sick of it and are struggling. I just had a guy join my family that's been trading, and he said in his signature, losing for 12 years to the tune of $60,000 to $70,000 in educational material, not to mention his accounts that are blown out. Now, I'm not trying to insult you. If this is you, you're in the right place today. Let's talk about how to get this turned around. All right, some of the common things that are out there: MACD crossovers, moving average crosses, scalpers, Elliott wave, account cop. But understand that this stuff doesn't work, and here's the reason why. The market makers trade against the retail traders. They allow these patterns and these objects to work once in a while to keep you in the game. You ever have a great winning day and be up, I don't know, 10, 20, 30% in your account, only to erode the equity by the end of the week? But what happened is you had that glimmer of hope that keeps you in the game. Man, you were up 30% and you made $3,000 in 2 trading days on your $10,000 account, and you have it in your head that if you could just be consistent, that you would be a multi-6-figure earner in the business, and you could leave your job and provide for your family the things that you know they deserve. Market makers see to it that this doesn't happen for you. Some common misconceptions or buzzwords that go around about the market and get repeated over and over again by the talking head, by the news, by the boards, the Forex Factory, Peace Army. Have you ever heard that the market is too volatile to trade? A recent one excuse that I've heard from people is that the range is too tight to trade. Scaling out of a position, that's based on fear and not understanding where the market would go. Roger, we are getting to it, buddy. Risk appetite. Think about this term. What is a risk appetite? Who made this up? It's the stupidest thing I've ever heard in the business. What is that when you just feel like losing? Oh, I want to eat loss. I have an appetite for risk. It's the stupidest term I've ever heard, and it makes me sick every time I read it. The trend is your friend, blah, 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 right? If that was true, We would have a bunch of trend followers, and it would be simple, and you guys wouldn't be in here with me today. And of course, the famous one, technical book, Support and Resistance Trading. You draw a line and hope that price bounces off there based on some other point in time. Garbage. These terms or market myths are based on a trader's inability to identify what's really going on in the market. They're repeated on CNN, CNBC, and they become a market fact. The traders repeat it. Maybe they use it as an excuse for their wife. Maybe they use it as a reason why they're not having success. But then it becomes a market fact, and it further perpetuates the myth, which in turn lines the pockets of the market makers. This stuff has no bearing on how the market's going to actually play out at any given time. What does determine how the market is going to move is where the contracts are straddled and line. I'm going to illustrate that for you. Listen, I can take you back to Barnes & Noble, Borders. Those places are going out of business. But when they were open, I can show you hundreds, if not thousands, of books. And I could show you hundreds or thousands of traders that have failed trying to trade those systems that are in those books. It just simply doesn't work because the dealers see to it. All right, so you're probably asking yourself, what is a market maker? In a zero-sum game, someone must execute against you in order for there to be a business. Do you understand? Is that when you pull the trigger as a seller or a buyer, someone has to act against that trade and buy from you or sell to you. You understand? That's what makes the market. That's a market maker. There has to be a winner and a loser come settlement time. When you click out of your trade for a win or a loss, somebody has lost. The dealers or market makers take the other side of your trade, and that is where instant execution and the liquidity comes from to keep you in the game. Don't you see how they brag about microsecond fills and no lag time and 2 milliseconds to our server? Don't you read these advertising or marketing pieces? This is part of the requirement as a market maker to give you instant fills, to provide liquidity for the market, to take the other side of your trade. So if you're offended that somebody's trading against you, don't be. Because for not these guys, there would be no market. If you thought that you were pitted against Kim in California, they don't match you up with Ted in Philadelphia. You're trading into a pool of liquidity against the big dogs. One or two things is going to happen. You're going to be right, you win, wrong, you lose. But your orders are dealt with through blocks against the dealer's open volume, and you're either stopped out or allowed to win based on what the dealer's holding as net long or net short. Okay, you with me? If the dealer's net long, that means the retail market's net short. Those traders will be acted against for the dealer to turn a profit. It'll become clearer when I illustrate it for you, okay? Okay, what is a market maker? Continued. You heard them called big dogs, smart money. What they really are, boils down to, is a group of people who can and do control the direction the market's going to take at any given time or any given day. And it's based on nothing more than the money and how the contracts are straddled. Net longs versus net short. Who can be a market maker? Probably the top families, banks, large institutions. Anybody that has a large pool of liquidity that can move the market in their favor to get, or say reach their objectives. Okay, I'm going to ask you some rhetorical questions, and I already know the answer. You wouldn't be here if none of this was true. If you had your stops hit, you ever been stopped out? Have you ever got taken out by just 1 or 2 pips or simply by the spread? You're sitting there, you had some good analysis, you thought you had the direction, and lo and behold, you get taken out 2 or 3 pips. They take out your order and they go the way you had figured it. Ever analyze charts for hours? Ever have a pretty good couple of days, get excited? And then you sit there and you go, all right, honey, lock the door. I got this down. I'm going to sit here and study over the weekend, and come Sunday night, I'm going to nail this. Look at the 1 hour, 4 hour, weekly, daily, monthly. All the charts are in agreement. You got this. And then out of nowhere, bam, you get killed. You don't understand what happened. The trend was up, everybody's up, dog's up, cat's up, mother's up, charts are up, price goes down. How the hell does that happen? Well, a lot of you are agreeing with me right now and say that's happened to you quite a bit. Well, the guy that's responsible for that behavior is the guy that I mentored with. Think about how powerful that is. Okay. Some of you might say, Steve, I don't trade Forex. I like to trade equities, metals. That's okay. Because I'm not teaching you a system. I'm going to show you how to identify a certain behavior that these guys make on the chart, and they leave footprints that are visible to the trained eye. Once you see it, you can't unsee it. The behavior is universal in every market, equities, metals, futures, whatever you like to trade, Forex. If you could identify it in real time, you will be successful in the trading business, period. End of conversation. All right, so let's have a look. All you guys want ants in your pants that have been telling me to hurry up, here you go. Okay, there's a daily setup that happens in Forex. What I want for you is to stop trading with fear. Fear is the biggest killer in your trading business. Okay, now, the way to stop trading with fear is to understand what the dealers are going to do next and be reactive to those behaviors. You have to stop thinking internally and believe that every trade will turn against you. Until you can shake that belief, you're going to continue to struggle in the business. And I want you to realize that trading is a fantastic profession and can be mastered with the right training. No amount of studying the wrong shit is going to make you a successful trader. Do you understand? If you're using some system, I won't name any systems, I don't want to insult anyone. But if you're using a system and it doesn't produce because it's not in line with market makers' behavior, studying that system ad nauseum for days and weeks on end is not going to deliver success to you. Yes, Eugene, that won't work. Do you understand? Doing the wrong stuff over and over will not make you a successful trader. Exercising discipline in the wrong system will not make you a successful trader. Okay, so let's talk about, if you got a piece of paper and pencil, by the way, this is being recorded and will be hung up on the website, both mine and Compass's, at the end of the presentation. Okay, this is the daily market cycle. Look at this chart just for a second. Keep it in the back of your mind. If you want to take a screenshot of this, knock yourself out. Use Jing or screen capture right now. Take a picture of it. Not going to be offended. Okay? Now, keep this in the back of your mind as I walk through my illustration. Look, in the past I've hand-drawn this and it's been crazy and people make fun of my drawing, and my wife has taken some time to lay this out for me in a more concise manner, and what I'm going to do is actually click through the slides of pre-drawn material, but understand that it's the point. All right, so here's how the market starts. We're going to look at the 24-hour market maker cycle in the Forex market. Okay? Need to grab a pen. Hold on, so I can mark a little bit. Okay, here we go. Every day at 5 p.m., the high and low reset right here. This is the daybreak line right here, 5 p.m. This is most dealers. And by the way, all times are Eastern Standard New York. Okay? Standard time. The dealers will come out at the open and they will move up about 15 to 25 pips to the upside. What they're doing is they're setting a thing called the market maker spread. Don't confuse this with the dealer spread. Two different things. The dealer makes profit on the difference between the bid and the ask. The market maker sets his range during Asian market or initial market hours to start accumulating and straddling contracts. Okay? So he makes a quick push, 15 to 25 pips up. What happens? Jeff Gilman gets excited and he goes, man, Steve, that looks good. I'm a buyer right now. I'm a dealer. I sell to Jeff. Then what happens? A few minutes later, they quickly pull back and they go down 15 to 25 pips. And this is based off of the open, okay? In the open right here, at the open price, they will go up 15 to 25 and down 15 to 25 from the open. Eugene gets excited. He sees it going down. He's a seller. I'm a dealer. I buy from you. This behavior goes on for 6, 7, 8 hours, 10 hours, whatever the amount of time that is necessary for me to build up my float as a market maker. I set the IHOD in this process, which is the initial high of the day, and the initial LOD, initial low of the day. I trade within that range and see how the traders straddle the market. Remember I mentioned net longs and net shorts? I'm looking for some imbalanced accumulation to give me success as a dealer in the marketplace. Okay? Let's say for argument that the market is built up $3 trillion are long holders and $1 trillion are short holders. Now, I know that's a gross exaggeration of the market volume. This is spread out over 25 pairs, blah, 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 blah. But I'm just trying to simplify the math problem, okay? So bear with me a little bit. If I'm a dealer, or let's say you're a dealer, and you're holding massive open volume net long, in order for that net long volume to build up, what did I have to do as a dealer? When you click buy, I have to fill your order and sell to you. Take the other end of your trade. Okay? This is how the market works. Everything else is bullshit. Between 1 and 4 a.m., the dealer will widen the swing. Why does he do that, Steve? Why in the world would he widen the swing? Anybody here don't want to admit that they trade breakouts? The dealer widens the swing to pick up the breakout traders, trigger their stops, and drag them the wrong way. Okay? So if you've ever been whipsawed trading breakouts, understand that this is by design and meant to happen. After the dealer whips you out, you breakout traders out, he will then make his move. He will make an aggressive false move in this example because we know the market's holding net long and set the high of the day. So what happens is the initial high of the day is now broken and he extends it aggressively towards the upside. The high of the day is locked or sets in. The dealer will make an aggressive move back off of that number. Okay? What is he doing? Well, there's people that trade yesterday's high, might come in around here. They trade support or resistance breaks. The dealer will break above those numbers and come back below to trigger the stops of the people that have placed pending orders in this area here to go long as a continuation trade, and he will pull them and hit their stops out of the business. He will then make a secondary pass. The second pass is the dagger. He triggers the stops of anybody that got short, right? If you saw this and got short in here, you are now stopped out. But something really, I guess heinous is the right word that he does, is this. On the secondary pass, he may go above the first leg or not. The reason that he does it is this. He will validate the AB equals CD. People that project beyond here, he will validate those orders and then pull back immediately away from them. Okay? He will use a thing called a shift bar. Let me explain to you what the shift bar is, because as soon as I explain to you, you're going to say, holy crap, I've had that happen to me. Ever been in a trade that's been bouncing around -1, +2, +3, -4, back and forth, and then in the blink of an eye been down 15 or 20? That is known as a shift of the zone. It appears on one candle, one bar, whatever chart you're using. Here's what it does. The dealer has worked this area up in here. He has created an open float of either net longs or net shorts, depending. In this example, he's created some continuation of net long. When he has those traders in a trade, he has to get them to panic and lift their stop. He does this by a shift bar. He shifts the zone away from higher level longs in one 15-minute swipe of 25, 30, 40 pips. One candle, one bar that he gets the hell out of there with, and he gets everybody into a panic that has taken higher level long positions against the dealer's float. Do you understand? That's how, in the blink of an eye, you've been down big. Maybe you go on a coffee break. Maybe you put your order in, set your stop, set your limit, walk away. Maybe you're using a 50-pip stop. You come back, you're down 25, 30 pips. You don't know what the hell just happened. That's what just happened. The dealer has shifted the zone away from those level traders and nailed them. No, Bubba, shift. That's a good term for it. That's a pretty good term for it. All right, so look. They'll then, after the shift bar, they'll run the behavior on the other side of the spectrum. The outer fringes is where the dealers trap traders and make their money, right? Over here and over here. They will then end back in consolidation and accumulation. Here's why. If you owned a $4 trillion business, would you want to start from $0 the next day? No, you wouldn't. You wouldn't do that. You would leave some number of traders trapped overnight, causing them to pay, swap, and roll over, and you'd keep them hung there for 2, 3, 4, 5 days until they cry uncle and click out, or until you own their margin and clear them. Okay, here's a good one for you. Ever got the direction correct, been up 100, 125 pips, move your stop to break even, convert your spot to a swing trader, and then come back, and all of a sudden you're down to 60, plus 60, plus 45. That comes from a lack of understanding the dealer cycle. The dealer will pull off of the high or off of the low 25 to 50 pips, depending on the pair, to end the day back in mid-level to keep the traders, higher level longs, lower level shorts, trapped until the next cycle, which begins again at 5 p.m. Okay? That's the reason that if you've been up big in a swing or position trade, it comes back down 25 to 50. Now you're only up 40 or 50 pips, and you're like, man, I should have took it when I was up 100. At end of day, dealers pull back and go back into an accumulation cycle to start over for tomorrow. Understand? It's by design. It's their job to keep you at bay. All right, so you have your accumulation phase. 5 p.m. day reset, dealers trade in the range. They widen the swing to pick up the breakout traders. They act against the contracts that have accumulated. They will, again, at the outer extreme fringe, create panic and franticness in the market. They will run the real trend against the higher level traders. They will do the same behavior at the low of the day. They will then pull off those numbers and go back into consolidation to end the cycle and leave the traders that they have stuck so they don't have to start at zero tomorrow. All right, don't believe me. Let's have a look. This is EJ a week ago. Okay? Accumulation phase. Set the spread. An aggressive move towards the high. Pull back. Secondary validation of the technicals in the books. Pull back. Variation on the theme. Hit the low of the day. Pull back. End the day in consolidation. If you took this as a swing trade, you were up big. You gave half of it back by the end of the day if you didn't book. Okay? If you took this trade based on this formation into the direction, you easily booked straight down, straight drop, 50, 60, 70 pips or more. Understanding the cycle and the timings and how it works. Okay? Steve, you're crazy. I don't see it in there. All right, look. 2 days back to back, same cycle, variation on the theme. You have to understand how to read the market maker's intentions in the chart to understand where you are in the cycle and how to trade it. Okay, so here you go. Accumulation phase. By the way, this is the day tracer right there, day changeover, 5 p.m. tracer. Market makers set the accumulation phase, stop hunt, they clear the board with the pin. Think about for a minute what they did in that one candle. Here's the breakout traders. Breakout traders bracket the last few bars of the Asian range and set their breaks above and below. The dealers clean those out in one bar. See it? Stop hunt low, induces lower level shorts to take a position to the downside. Also hits the stops of the weaker long holders that have took up positions in the accumulation phase. Dealer runs the trend, ends the day on this behavior back into accumulation. This end of day accumulation bleeds over into the next day. And here you are again, the next day accumulation. Dealer picks up the breakout orders right around the 4-hour line, pulls back, hits the stops, runs it up, illustrates the same behavior back into the range to end the day. Back-to-back cycle. This is on Euro USD 15-minute. Go look at it. You understand? I'm not delusional. There is no way that that pattern I just drew for you can show up day in and day out without me knowing something's going on. But here's the rub. I know how it's going to play out every day. I know what they're going to do. It's almost like the market makers have handed me, and now you, the playbook to be successful in the business. You basically decipher the signals the market maker hands you every day and trade in line with the big guys. Yes, Robert, you're right. This does occur in ES and E-minis over and over again. The dealers do this stuff over and over because it works. Fear, greed, the things that control the market, make people behave the same. They try to short a breakout. They don't understand when a spike comes in what's going on. They don't understand the stop hunts. They don't understand the cycle itself. They try to take a trade that goes well and convert it into a swing or position trade from lack of knowledge. That is the greed factor. You get in a trade, you're up 40, 50 pips, all of a sudden you're a position trader. Yesterday you were a day trader, it's going kind of good, now you're a position trader. What the hell? Oh, well, tomorrow I'm a swing trader. No, you have to understand the cycle and act in accordance with that cycle to be profitable in the business. Okay? So let's lay it out one more time so you understand. A market maker's main objective is to trigger your stops and get you into margin trouble. How does he do that? Erratic behavior in the market. The news release. If you don't know this, the news releases are crap. Here's what I mean. Do you think that the guys that control the market have no idea that the news is coming? You think like they go, Oh man, is it Friday already at 8:22? You mean non-farms in 8 minutes? Shit, I didn't do my homework. I'm not ready. Do you think that's what goes on, or do you think they use the news release as a trigger to get the traders in trouble and act in accordance with or against the numbers that are released simply based on how the positions are built? Think about that for a minute. They are the news. Here's what happens. The dealer, let's just say going into non-farm payroll, the dealer will be in consolidation leading up to non-farm. Let's say that this line is the 830 line, okay? Right at 828, they will analyze their net longs and their net shorts. They don't give a crap about the news, what it says or what it doesn't say. You understand? They will analyze the news. I'm sorry, their contracts. You guys got me saying it now. They will analyze their contracts, and if they're holding net long or net short, they will act in accordance with or against the news release in order to take the money that's available to them by the retail traders. You understand? Has nothing to do with jobs are down, there's unrest in Egypt, whatever the reason is. They use that as the trigger. Think about this for a minute. How many times have you anticipated euro dollar going up and it tanks based on a news release? What is the first thing they say on the news? Oh, investors weren't quite as frightened by the bad news in the Eurozone today, and euro rose 150 points. That doesn't make any sense. If the news is bad, then euro should correct. You understand? What really happened was that there was a buildup of short positions, and when the news came out, even though it was negative about the Eurozone, they don't care. They rose the price anyway to take out those traders and get their margin. That's what happened. Okay? I hope you guys understand. All right, listen, I've been in the business a long time, and I've heard this 100 times, 100,000 times, that I am absolutely crazy, and it can't be that simple. Here's what I'm going to ask you to do. All you number ones, first-timers that are here listening to me, I hope you don't hate me, but if you do, I understand. I'm abrasive, I know. Forget about my personality and how I come off. Go back to the charts in the quiet of your own home. Take everything off of them. And what I want you to do is scroll back through and look at what I'm talking about. Do this on a 15-minute chart, and I promise you what I'm talking about's in there. All right? We'll look at some charts in a second. So what I'm basically telling you is there's high and low moves designed to trigger stops and get people in trouble. Market makers will set the high and low of the day with aggressive moves to lock in their dollar volume and leave traders stuck for the 24-hour cycle, if not longer. This causes fear and panic, which in turn causes emotional behavior into a position going against you. But if you understand how to read the market maker's behavior, you will undoubtedly all right, here we go. Mike Penn. Okay, remember breakout traders. People highlight the Asian range. They're looking for a break. The dealers throw a false move to the upside to grab those pending orders. They quickly shift across, take out the stops. If any of you trade breakouts, you know that you take on a break plus a close, you enter here, and in 15 minutes, if your stop is here on the other side of the range, you're out. The dealers then break plus a close, you turn around and reverse the other way. Okay? Then what happens? Consolidation. They never extend the trade. The dealers are picking up contracts and getting people to accumulate lower level short positions. They then shift the bar Remember I told you the shift bar? They shift the zone aggressively away from lower level short holders and leave them stuck for the cycle. That's the bar that if you're a retail trader puts you in pain. If you were short and they shift, that's a 30, 40 pip bar. If they shift that bar away from you, they have now stuck you for the cycle. They either hit your stops or they forced you to lift your stop. And if that's the case, you're in for a long night because the trend starts after the shift bar and will run 6 to 8 hours, and you just sit there and watch it go against you. If you've ever done that, I'm sorry for you. But it's time to take control, and it ends today. Someone just said my chart was an antique. Well, here. That chart has been in my slideshow for a year and a half, but here's the deal. I'm not going to go back and change my slides to show you the same stuff over and over, but I did add one for you guys. Pound dollar last week. Go look at it. This is the exact illustration, okay? Exact illustration that I just laid out for you. And it's kind of ironic is, I think it's fitting is that this exact chart pattern happened the 1st December that I did a class with Compass. I mean exactly. You understand? So let's look at it together for you to see what's going on here. Asian range. Dealers tag the breakout traders, right? Pull them back, hit the stops, they're out. Induce short selling, pull off, hit the stops. They do it a third time. Shift the zone in a couple of bars, and it's off to the races. Your job is to simply initiate a long position near the short of the day or a short position near the high of the day. Simple. That's it. That's how you trade. Everything else is crap. There's some nuances. There's some changes to the theme on how the dealers behave. They do extended stop hunts. They do certain things that I'm not going to give away in a free venue. These are the things that were taught to me, how to analyze the stop hunts and certain segments of the market to know what trade is warranted. Rick, that trade is from GBP USD last Friday. Go have a look. It's not virtually, it's the same. Now, what I'm telling you is this chart showed up 2 years ago exactly the same on my very first class with Compass, and I thought it was fitting that we put it in there. Okay. We'll take some questions in a few minutes. So here's what I want to do. I want you to take everything off the chart and look for what I just talked about. And this is EU a couple days ago. All right, look, let's look at this. Clean chart, nothing on it. Here's your Asian range. Here's your M formation. Your high of the day has worked. I grabbed the position on the open of this bar. I got slipped a little bit. The low of the day was established. Went into consolidation. I was able to book out with 50 pips. Understand? That's it. Look at this. Take a screenshot of it. I don't care. I'm not offended. It's recorded. Your job is to initiate trades. By the way, stop loss goes above if you're short and below if you're long. Why? Well, they're not going to move an entire market for you, Ralph, just to come back and get your stop loss. If your stop is outside of the dealer grasp, outside of his reach, you're in a safe place to be. Okay? There's the drawing on there. Think about this for a minute. Rob takes a short position right here, and he puts his stop loss right there. If you have, in fact, analyzed the market correctly and identified the true HOD, you're safe. Think about two hands of the dealer. Okay? Picture two hands with money in it. Let's say that on this first pass, the dealer has a big fat handful of 500 million bucks. Okay? Let's just call it 500M. All right? I'm terrible at drawing. That's why my wife wrote those for you earlier. So I'm just going to stop there. Just call it 500M. Here's the deal. If he comes back, his fist is full of money, right? If he comes back on the secondary pass and goes above this level, the people, think about your own behaviors. How many times have you taken a bad trade and go, man, if it goes up 2 or 3 pips, if I get within -5, I'm going to click out. Think about that. Okay, well, guess what? The dealers are not in the, I'm going to let John and Roger click out business. They're in the, I got those guys trapped, I'm going to pull the market away from them and punish them. So by making the secondary pass, he would allow some amount of open volume to click out and release. He is not going to release that volume. So if you've analyzed the true high of the day, your stop loss can be 2 or 3 pips above that high, and you are safe. What does knowing the true top and true bottom of the market do for you as a trader? How many times have you taken one lot with a 30 pip stop? Why not take 30 lots with a 10 pip stop? The risk is the same. It's just now heavily skewed into your favor. Tighter stops at true top or true bottom give you a risk to reward ratio that is unprecedented in the business. Most of my top traders, Joe, Carr, Kim, they're risking 7 to 10, 12 pips tops on a trade. This affords them the ability to trade higher lots at the same risk amount. If you know true top and true bottom, you're not afraid to place your stop. Because if the top is extended or the bottom is breached, you were wrong in your assessment and you need to be cleared out of the trade. You understand? I can go on all day about the benefits of understanding how to trade in line with the market makers. But the most important benefit is why you got in the trading business in the first place. And that was to make money. You didn't get into being a student of the game. I've heard all the excuses from people. Oh, you know, Steve, I had this system worked out for a little while, and then I started having some inconsistency. I'm just a student of the game right now. You want to be a student of the game? Sign up at Harvard. Trading is to make money and nothing else. If you're not successful in the business, you're kidding yourself. And the reason you're not successful is because the knowledge I just dropped on you right now is probably something you've never heard of before. You understand? No amount of doing the wrong thing is going to make you successful. I have evidence of that in my group. 15 years trading crap. 17 years, 12 years, 8 years. People are failing in the business. They come to me, some traders right out of the class have turned the corner because they said, I hold the missing piece. The last piece of the puzzle they were missing to understand the behavior. Some people say I'm the missing link. That's a joke, by the way. Cro-Magnon man. All right, so look. I hope you could see what I'm talking about. I've told you to go back and look at the charts. I have a few other illustrations. Extended consolidation before a news release. The dealer holds the level, breaks to the high side, bam, got him. All right? Here's an extended stop hunt to the downside. There's your consolidation. There's your move. Dealer pulls back, illustrates the behavior. In, stop loss right here. Take profit at 50 pips, back into the range. Okay? Again, coming off the consolidation, stop hunt. The dealer decides to reaccumulate at the low. He hits the stops one more time, lights out, I own you. Variations on the theme, my friend. Railroad tracks to the low. Dealer consolidates, spikes hard, pulls back off of a news trigger, in and out, 50 pips, done. Okay. The reason this works in every single market, some of you asking, equities, metals, gold, HP, doesn't matter. Is because, first of all, there has to be a market maker in every tradable market. So let's take a look at some of the popular commodities and see the pattern on the chart. Okay, look, here it is. in gold. You see it? Dealers trigger the stops and rise. Dealers trap long and sell. Okay, same thing here. Understanding the cycle will make you successful. Silver. Consolidation, accumulation phase of the market. Dealers trigger the stops at the open. They rise. Same thing. Top side trap into the range. Do you see it? Oil. Same pattern. Come on, man. You got to give it to me today. All right? We call this an outside structure to the high. They correct back in. There's the stop hunt to the low, back into the accumulation phase. Every single market. Some of you like futures. These charts are a little stretched out, but here. Bam, bam, off the low. All right, HP. Some of you like HP. Here it is. Dealer comes out of accumulation, fades to the downside. Gotcha. Pack your lunch, baby. Okay, so here's what I'm offering you right now. I'm offering you a deeper understanding of what's really going on in the market. You're not going to find this stuff in any textbooks. Do you think the top elite of this business are going to go, hey, Jeff, look, man, I'm really sorry about your luck, but you're trading the wrong way, man. You should start following my moves. It's never going to happen. No amount of piling indicators on your chart, no amount of the latest and greatest breakout strategy is going to make you successful. You got to learn to read the dealer's footprints on the chart. That's it. If you could understand these guys' behavior and see the footprints or the steps that they make on the chart to trap the traders, you got it. You own it. You can't Google this stuff. It's just simply not available to you at this level. And because I've heard I'm crazy, because I go against all conventional wisdom. You ask anybody if you could pick tops and bottoms in a marketplace, they'll tell you I need to be in a straitjacket. Okay, I'm going to talk about another element I want to teach you guys. A few more minutes. I know I went long. It's already 2 o'clock. Sorry. Okay. Have you ever seen a chart that looks like this? And you should say yes. Because it's been going on for the last couple weeks. The pound dollars look like this. Here's what's going on. Makers use the 6 majors, which is really the 4 majors and 2 sub-majors, to work the entire board of currencies. Okay? Here's what I mean. It's called fractional disparity. Let me get caught up to my slides. I got ahead of myself. Sorry. Okay, so what I'm saying is correlation is another myth and cannot be used for solid trade signals. So let me lay it out for you. If a pair is chopping and not moving, and you're sitting there going, oh, I wish GBP would move. For goodness sakes already. This thing hasn't moved. There's a reason for that. The dealers are handling the crosses based on moving or holding a major at or near the high or within the range. Let me illustrate it for you a little more clearly. I'm going to pick on pound dollar right now because pound dollar has been choppy. So let's take GU as the example. And let's take USD CHF. Okay? Now here's what happens. USD CHF, let's say, is trading sideways. And you're like, I don't understand why USD CHF ain't moving. You hop over to pound dollar and euro, and they just so happen to be moving or trending. And in this example, GU is on its way up. Now, we know that we're dealing with fractions. What's the common? I'd say common denominator, but it's actually numerator and denominator. Is the dollar, so you cancel out the dollar. What does pound dollar and USD CHF make up? It makes up GBP CHF. Okay? So now, if you have GBP CHF, that pair should be trending in line with the base currency based on these two behaviors. Pound dollar's going up. USD CHF is sideways. GBP CHF should be rising. Now, here's the exciting part. Because dealers don't spend the money in GBP CHF, they spend it in pound dollar and dollar Swiss to create the move in the cross. It takes a little while, like dropping a pebble in a puddle and the lines ripple out. It takes a couple of bars, 15 to 45 minutes, to create the movement in the cross. So if you can identify the ranging behavior versus trending behavior in a couple of majors, you have a setup free coming to you in GC. You understand? It's a complicated dance that I illustrate in my class in more detail. But just know that when the charts are choppy, don't sit there and go, oh, this damn pound ain't moving, I can't believe it. No, what's going on is the dealers are handling the crosses and giving you a wealth of opportunity behind your back that you didn't know to look for until right now. Okay? All right. A few more slides and I'll take a break and we'll do some questions. Yeah, I just went over the correlations. All right. So look, here's the chart. Typical chart. Daybreak, extended accumulation. The dealers throw a little, pick up some traders in there. They run the stops. Hit the high of the day, pull back, end the day back in consolidation. It's a three-phase market cycle. Consolidation, stop, hunt, trend, back into consolidation, the cycle repeats itself. Lather, rinse, repeat, my friends. Consolidation, stop, hunt, trigger the traders, induce, run the trend against those traders, back into consolidation, the cycle starts over, reset the 5 p.m. dateline. Okay? All right, I think this is a good place to take a break. Let me look at my slides. Yeah, okay, let's see. What do I got? Understanding the market maker moves gives you a major edge in your trading. Right now, you now know more than 90% of the trading public that's out there. All right, I'm going to take a break right here for 5 minutes. I'm going to grab something to drink. My throat's killing me. I get a little excited if you haven't noticed. I'm going to let Kim come on for you for a minute, and then we'll take your questions for about 10 or 15 minutes. We'll wrap it up, okay? Kim, if you're available.
Hey, Steve, thank you so much. Sorry, I had to get myself unmuted. So while Steve gets his drink, you'll probably hear that little click. He's a Diet Coke fiend, so I heard it when we get ready to get started. He always has to get himself ready to go. So as he's shown you today, I told you this was going to be really, really eye-opening. You know, I think the information that he, reveals, I mean, it completely changes how you look at the market. Like I said, a couple years ago when I first saw this, that was one of my first comments that I made to Steve, was, wow, once you see this, you cannot unsee it, and you'll just never look at the market the same way. I didn't realize that the one thing that I was always missing was understanding behavior. And so that's absolutely, what he's giving you today is, a different way to look at the market. I mean, you can go look today. It's interesting how he showed the pound, what was that, last Friday's chart. But if you go look today, you can see that accumulation phase during the U.S. session. You can see that that bar where they went to induce people. Same thing happened on Aussie and Euro. And if you don't really know what he was talking about working the crosses, go check out the Euro-Aussie chart for the last few months, and check out the yen crosses right now, because it's going to, it's going to really reveal to you absolutely what he's showing you happens over and over and over, and it just gives you incredible confidence when you're looking at the market, because you know what they're getting ready to do, and you don't have to be lured into it. Does it mean that you're, not going to have losses? Absolutely not. That's not what Steve's telling you. But the one thing that he is showing you, that if you do have a loss, where to put that, so control that, and exactly where to put your stops, because that's important. and you know how to go back and get your money back because he's going to show you and teach you those patterns to look for as well. He'll be back on here in a minute, but earlier, I told you earlier when I came on and was introducing Steve that we'd talk a little bit about our upcoming class. I'm super excited. Like I said, we've been working now with Steve for it's almost like exactly 2 years when we're going to be having this. So we're going to be having our class, Market Maker 3.0, we're calling it, since this will be our third December to have a class, and it starts December 11th, which is a Tuesday evening at 6 p.m. and it's going to be online live through Friday. I think that's the 14th, so we're super excited about that. Would love to have you guys be able to join us for that, and all of Steve's previous students get to join in and have that opportunity to hear him again and again, because it's repetition that finally gets through, and it's you start having those aha moments. Asking too is like, oh, this is all great, but how am I going to learn more, or what's the purpose? One gentleman said, oh, he needs to put this in a book, and my comment back was, it's even better than a book that he could write, that then you're just reading it and you don't know if you're really getting it. He's showing you on the charts and taking you through it step by step, and each night goes through a different phase so that you can start connecting the dots. So I would have to say it's much better than a book because you're having access to him, which I think gives that. You can ask your questions, and the one thing he gives is lots of homework. And Steve and I were talking about this before. I know a number of the traders that have had some huge success from him, and they didn't look for the shortcut. Boy, they just dove right in, started marking up those charts. I think Tim was one of our, at the time Rick was having so much success, but we had another trader that came in and surpassed him at the time, started making over $1 million a month, which I think is incredible. But he actually first blew up his account, came back and said he knew it was in there. He just had to find it. Spent about 6 weeks, he said, about 20 hours a day in front of the charts. And he just said, I wasn't going to make any excuses, and now he's completely changed his life. So it is in there. You just have to, you're given the playbook and the keys, and then you have to make it happen. I'm not sure, Steve, anytime that you're ready to jump back in, feel free to do so. I just wanted to make sure to give people information about the upcoming class, because I know we're excited to have that. The classes are always really, really, really good.
Yeah, I'm back, guys.
Okay.
I'm here. Here, let me see.
All right.
Oh, I thought Casey was going to put up a slide for me. I don't know.
Let's see.
Okay, sorry.
I'm not sure if.
Here, listen. Here's the deal.
Just one second.
I want to invite everybody to come back tonight to. Yeah, go ahead and do what you need to do there, Kim. I want to invite you guys back. We have another webinar presentation tonight at 10, and it's funny is a lot of my students attend these because I'm off my rocker. They never know what I'm going to say. But listen, here's the deal. Go to my website, and we have a replay of this video. Will be up in a little bit, and also there is a report that I wrote. It's an ebook type of report. You can download it, and it illustrates with some chart examples of exactly what I just laid out for you guys. I talk kind of fast. I'm jacked up on Diet Coke. Maybe the book, you can read at your own pace. Maybe p.m. Eastern. I normally sleep during the day, but Kim made me get up because she said we're trying to appeal to some people on the other side of the world. I usually sleep from 7 a.m. to 3 p.m. That's my schedule, but I bit the bullet and got up a few hours early today to do this. So I feel a little off. I don't feel like I'm on my game today with my presentation. So I apologize for that. But if you want to hear a better one, I'm going to go lay back down when this is over, and tonight I'll be on my game 100%. for you
Uh,
guys?
well, I think the information you shared was really, it empowers traders, because that's really what it's about. You have to be able to connect those dots, and you have to be able to see that behavior and understand. I think, really what Steve talks about a lot is, it's the patterns. But for me, I think it's so much bigger than that, because I think it's that transparency that that you're able to reveal to us and look in the charts, because for myself, I know someone earlier today that was looking to go short on a couple pairs, and the market already kind of moved down. I was like, you know what? I'm expecting just any time here that we're going to see a little trap set, because you can see that accumulation phase building up. So I think it's great what you teach, and let's see, we have a good number of questions, and so for some may not be able to come back tonight because of the time zone that they live in, so let's go ahead and answer some of those questions. First of all, I want to say too, we had a number of you guys ask where to get more information about the upcoming class, and you can get that at www.compassfx.com/Steve. And I apologize, I genuinely apologize that we don't have a slide so it's easy for you guys to see, but we put it in the chat so that you guys, if you look in your chat window, you're going to be able to see the link to be able to go there, and I will put it in there again right now. I think last time when I put it in there, I only sent it to us, and we really don't need it, so I'm going to send it to you guys as well. So you can go to compassfx.com/Steve, and you can get all the details. The upcoming class, like I said, it starts December 11th through the 14th. So while you're doing that, let's go ahead and answer some more questions because, I want everybody to have their questions answered. You know what, Steve, the one question that I see on here over and over and over is, what's the best time frame to trade?
Yeah, if you're trading 1 minute and 5 minute charts, you're done. That's what's making you toast. Get off of those charts and just use 15-minute or higher. Listen, if I told you the trend runs 6 to 8, sometimes 10 hours, what's your hurry to get in with a 1 or 5 minute chart? You'll make good entries on the 15 when you see the behaviors more clearly instead of trying to hurry up and rush. There's no hurry to make a bad trade, my friend.
And and the interesting thing is, when you get in a bad trade, then you can't, your emotions take over, and you can't clearly see what you need to do anyway. And I think one of the biggest things that you teach, and for a lot of day traders and a lot of retail traders, it's hard for them to understand this, but you're not saying take a whole bunch of trades. Your biggest message is you're doing this to make money, and so you look for those high probable trades, and if they're not there for the week, you don't take a trade, and I think you're fine with that.
A lot of people overtrade. That's a huge mistake because you're exposing yourself over and over again to the market. You're paying the spread over and over. If you wait for 2 or 3 pristine, perfect, clearly identifiable market maker setups that you know are going to go, those are the kind of trades that if you can get good entry close to the high or close to the low, your stop loss will be tight, and you can go 2, 3, 5, 50 standard lots on something like that. And instead of taking 10 trades with one lot, why not take one trade with 10 lots and know that you've got it right for the week, take your money off the table, and be done. That's overexposure is the biggest problem with a lot of traders. I saw a question I want to grab. Someone asked about the moving averages. It scrolled by a few minutes ago, but yes, there are moving averages on the chart. They don't mean anything as far as the pattern's concerned, but why do I have them on there? Because remember I told you the dealer's job is to fake you out and to trick you. Well, they fake to the moving averages. They break above a 200 and come back below, or vice versa. They'll fake to the 4-hour line and illustrate these behaviors at those moving average points. That's why we want to identify them on the chart, because if you know, man, there's the 200 EMA, the dealer will go right to the 200, throw a high of the day or low of the day formation, and correct off of those patterns. That's why you need to see them on the chart.
Yeah, and I think that is so big for people, to be able to understand that really what you're trying to show is the behavior, because the interesting thing, the behavior shows up on any time frame, and it's just what you have to learn to watch for, and it's not the moving averages, um, it's the behavior. They're kind of like training wheels for
Yeah.
people to use. I think one of I think the number one question that I saw in here, and I know you spoke about it, but can you really talk more in depth about this? People want to know, does this only work on the Forex? I know you mainly shown the Forex and whatnot, but can you go into a little more depth about that, because I see that kind of as probably the number one question.
Yeah, and it works I showed you a picture of oil, picture of gold, picture of silver. HP is a stock that I like, but understand that because market makers make every market and human behavior is the same, then yes, these patterns appear in every tradable. So they're there. You understand? Anything that has two people pitting against each other for profit will show this behavior because the fear and greed that drive the market are present.
Yeah, absolutely. I think this is a good question from Patrick. He says, why are the lower time frames so bad if you control your risk?
Because you don't have anything there, Patrick. If they say the pattern is fractal, but you have to understand the big picture, and you can't see the big picture on a 1 or 5 minute chart. You need to look at, when you're analyzing your charts, people go back for months and years, you need to look at 3 to 5 days of data and understanding the information that I have, how it applies to that 3 to 5 day cycle, and where to take your entry.
And I kind of look at it because when you think about especially in the smaller time frames, there's not going to be as much movement. So a lot of that then just grabs into that accumulation phase, and so you don't get to see, the stop hunt, the trap, because that's the behavior that you're wanting to be able to see. And when it's really setting up, that's what Steve shows you, is you're going to see it in the higher time frames of the accumulation phase really coming into play. So it all works together. Like I say, it's just a connect the dots. And I love Rick's comment. So it's not just another counter trend trading system. He's not teaching you a system. And so can you talk about that?
Rick,
Because
you're not counter trend trading. You're actually trading. The truth is there's two trends. There's a retail trader sucker trend, and there's a market maker trend, which is the true trend. So you're not counter trend trading. First of all, you're trading the real trend. But second of all, you're identifying where the market tops out and where it makes the real reversal point, which is people will tell you is impossible to do in the market. But I can tell you that 1,100 people in my group have seen it and know it's real. So identifying market tops and bottoms where the market maker makes his reversal is not counter trend trading, it's true trend trading.
And I think it's interesting because you can actually go take a look at it on that the Euro-Aussie chart that I was pointing out earlier. Is you can see where the accumulation phase was, and they dropped it about 1,200 pips or so. But it's interesting the market came right back up there, because if you follow the money, they had to come back up there to get their money. They're going to let you go and get some money, but they've got to balance stuff, and they always bring it right back. So I think that's what you really teach, is just a much deeper understanding of being able to see where the money's going, why the money's going there, and why it will go back there once you can read that in the charts. Let's see. I saw a question here earlier. Oh, about the class. Yes, the class is 4 nights, but here's what's important about. He lays this all out in 4 nights, and each one of the classes are about 5 hours each night. So it's a lot of material to cover, and they're recorded, and then gives homework for you to do. But then after you get through that part, which you can continue, it's all recorded, you can go back and go through it, then he lines up a boot camp that you go through, and that's on a weekly basis. So I think those sessions are about 90 to 2 hours, 90 minutes to 2 hours, and those boot camps usually are about 10 weeks, and then he really breaks things down further. So the amount of training and the cycles and the continued support and education, the follow through, really gives you the ability to grasp this and really get there. Let's see. Yeah, so the question is where to go to look at that. You can go to Compass details on that. And if you go to Steve's site too that he has up here, Beat the Market Maker, there's a lot of information on his site. But you know, he wrote a report just recently that's really good, especially for those of you that are new. You want to go on there and grab that if you can. And is there a live trading room? No, there's not a live trading room, but you do get access for a month with several of Steve's top students for a daily market review, and you'll have access to that. And that, I believe, is 4 days a week. So there's plenty of support, there's plenty of time for you to be able to get in and get it. You know, Steve has his theory of why he's not, you know, he's wanting to teach you to fish. He's not wanting you to follow him. So, you know, he truly, you know, has a belief and philosophy on that, and you know, he can share more of that with you as well.
Yeah, I'll elaborate on that a little bit. Listen, give a man a fish, he eats for a day. Teach a man to fish, he eats for a lifetime. When I was mentored, we spent 1 year going over the behaviors and how to analyze them on the chart. And truth be told, they don't even use charts. We were looking at what we call the big board. The big board is simply the highs and lows and the bid and the ask of any price, and the behaviors that the market makers leave on the chart are present in the board as well. What I did when I decided that I wanted to share the information is that I took the behaviors on the big board and converted it into a chart with the help of my wife, and she helped me write the class. The thing is that if I run a trade room, I've been involved in trade rooms. People have asked me to do them. We started one at the beginning of the business, and it creates a lot of dependent, non-successful traders. I don't want any more children. I don't want any more dependents. I want you guys to understand the material for yourself, master it, and control your life. So the focus is on getting the education and you understanding what's going on in the chart and how you can spoon feeding or hand holding. It's about teaching you the real understanding of what's going on in the market. And that's my philosophy, and that's the way I was taught as well.
You know, and it's interesting that you say that, because, you know, Steve will remember like a couple years ago I was really against it, and I was like, oh, you know, I really think that you need to do that. And, you know, we tried going down that road, and he was exactly right. You know, we had a little room open, but then, you know, people started saying, well, but he said to go this, and it's kind of like the blind leading the blind, and you know, it really didn't work. And what we found is, you know, when he started just saying, people have got to do their work, you know, because he doesn't know your skill set. He doesn't know what baggage you bring, you know, how fast you can learn, because everybody goes at a different pace. So, you know, I have to say I did argue with him at first about this, because I was really sure that he needed to do, you know, some things a little bit different, but he assured me that, you know, he would provide the support and the ongoing support for people to be able to get it, and he 100% has done that. Let's see. Yeah, you know, you should be saying a trader must be independent and responsible, not depending on someone else's decisions. Otherwise, he is not a trader. It's a really good point. Thank you for that message. Oh, and to be able to come back tonight, because I know Steve said, you know, he thinks he didn't, you know, give his complete A game today, and would like you to come back and join us this evening. I think he did a great job, but we did send, in the emails that we sent out, you will see a link. You will need to subscribe. You will need to register for tonight's webinar as well. So make sure that you do that if you want to be able to attend this evening, and that's going to be at 10 p.m. Eastern. And
And
the one
hopefully
we
by then Compass will have a slide for me.
absolutely. I'm sorry. Casey made those. I guess we maybe just had a little bit of miscommunication. Maybe she thought I was going to put them up, but I'm not the presenter. I thought she was sending them to you. So I apologize to you guys not being able to see all of the details about Steve's class, but you can go to compassfx.com/Steve, and you'll be able to get all the details about the upcoming class. It starts December 11th. And I do want to make a point about that. You don't have to wait till then to get signed up, because if you go ahead and sign up now, you're going to get access to the previous class recordings, the boot camps. There's a ton of information. There's a very active community and forum for you to get access to, so you don't have to wait to join. Stuff gets started well before the class starts on the 11th. You get your software, you'll have time to get that downloaded, get everything set up on your charts. So I think it's a good idea to get signed up right away.
I wanted to address something that I think Patrick asked about GoToMeeting. Listen, when we put on these webinars, there's a maximum of 1,000 seats, and they always fill up. So, Patrick, the reason you got in late is because someone dropped off or got bumped, and then you were able to get in. So, if you want to get a seat, you got to get in early. They always fill up, and you won't be able to get in until somebody bumps out if we're at capacity, okay? So keep that in mind. Scott usually opens up the room about 10, 15 minutes before. So get here early to make sure you have a seat tonight if you want to hear me again. And if you can't get in, keep trying. You won't be let in until someone bumps off if we're at capacity, okay? Just so you guys know.
And, I always say it blows my mind even 2 years later that I still see this. So I'm going to call you guys Steve's little groupies, the number of you guys that come in and listen to his sales presentation for new students to come in. Myself, I love to hear him too, but one of the students wrote, "I'm a living proof for any potential. Steve's method works. It's cool. From Nigeria, get it? It's eye-opener." Thank you very much for that.
All right,
yes.
I'm gonna bail. I'm gonna go lay down and save my voice. I wanted to leave you guys with one more bit of information. All right, look, ask yourself this. My number ones. How many times are you gonna take the same trade from the same system and expect it to produce only to lead you to failure? Albert Einstein defines insanity as doing the same thing over and over again, expecting a different result. And I want to equate that to your trading system. If you're pulling the trigger and you're getting stopped out, you're not understanding the direction, that to me, my friends, is the definition of insanity. Hopefully I'll see you guys tonight. If not, download my ebook. It's insightful. It's the same thing that I just talked about, written with some chart examples. And I want to thank Kim for being here, Casey, Scott, all the support you guys give me. It's fantastic. Thank you guys. And I'm going to lay down. I'll see you guys tonight at 10. Thank you.
Thank you, Steve. We will, if you can go look at any of the emails that we've sent out, even the email that you registered for this webinar can give you the link to be able to sign up for tonight. I will get with support and make sure we get another email that goes out to everybody that attend to be able to, so you guys can attend again this evening. We will have the recording from this session. Steve says come back live. As always, today you'll be able to sit and think about it. Now think about what you've heard. Go look at your charts. Come back and listen to him again tonight, because now you're going to have some other questions for him, and you can ask him live. And so get your questions prepared, but spend some time in the charts, because I think you're going to look at him and go, oh my gosh, everything he's saying, everything that he showed, it shows up. And you can look at today's chart, you can look at yesterday's charts, and I heard somebody was saying this recently, and I think it's so true. We can sit and complain about, oh, there's too much volatility, so we can't trade. Oh, there's not enough volatility, so we can't trade. We can have all kinds of excuses, but really the bottom line is they're just excuses. Once you learn how to truly become profitable and have that consistency, and it's all about the process. I think one of the biggest things and ahas for me, we had Dr. Ravizza come in, and he actually came in and spoke did a special presentation to Steve's students, and it was just all about mindset. and that's what he really drove home. You know, that's what professional athletes do, is they get the process down right. They don't worry about the outcome. I was just speaking to a trader the other day, and he was telling me what his goal was each week, what he was trying to get. And then, but I said, he had the outcome that he was trying to get, but he didn't have the process. And so I think that's what's missing for so many people trying to achieve the success that they're trying. So anyway, make sure if you have any questions, go to compassfx.com/Steve to check out the details for Steve. Come back and see us tonight. Get the link and get registered, because you will have to re-register or register for tonight's webinar, and that's at 10 p.m. Eastern. And this webinar was recorded, so you'll be able to, you will get this link as well. You'll get a link for this webinar. Even if you register for the one at 10 p.m., you'll still be able to have access to this one as well. So I hope that answers all of your guys' questions. I know we didn't get all the questions answered, and we'll try to weave some of those in for tonight's presentation. So everyone have a fantastic day. We appreciate you joining us. We look forward to having you with us tonight, or look forward to seeing you in the upcoming December 11th class. Have a great day, everyone. Oh, and for those of you that need the link, sorry, I just wanted to jump back on. The link is in the chat window, so you can just click right on that. We'll leave that up here for just a few minutes so that you guys can get registered for tonight as well.
The organizer has ended the session, and this call will be disconnected. Goodbye. The organizer has ended the session, and this